After 5 straight months of decline, consumer confidence just surged. The economy's biggest driver, you, is feeling a little more hopeful. But is it a true turning point? Or just the calm before another storm? Let's break down what this rebound really means for the U.S. economy in 2025, and whether it's built to last. Part 1. The Rebound. What just happened? In May 2025, the Conference Board's Consumer Confidence Index jumped 12.3 points, marking the first major increase in half a year. Here's what that looks like. Index rose to 102.4, up from 90.1 in April. The Present Situation Index, which measures how people feel about the current economy, also improved. And the Expectations Index, tracking future outlook, moved back above the recession warning threshold of 80 in plain English. Americans are feeling better about the economy, both now and looking ahead. But what's driving the optimism? Part 2. Why confidence is climbing. Now the rebound is being fueled by 3 main factors. 1. A pause in new tariffs. After months of tension, the Biden administration announced a temporary freeze on additional tariffs targeting foreign autos and key imports. This has eased consumer fears about price spikes, at least for now. 2. A strong job market. Unemployment remains low at 3.9%, and wage growth, while moderating, continues to outpace inflation. Most Americans still feel secure in their jobs, and job openings remain historically high. Third, stabilized inflation expectations. Consumers are no longer bracing for massive price hikes. Energy and food costs have leveled off, and core inflation has cooled to around 2.8%, which is within striking distance of the Fed's target. So yes, there's reason for optimism, but not everyone's convinced it will last. Part 3. Is this just a temporary bump? Some economists are waving a caution flag. Here's why. The tariff pause isn't a rollback. It's a delay. Existing tariffs on goods from China and Europe remain in place, and companies may still pass those costs on to consumers. Interest rates remain elevated. The Fed has kept the benchmark rate above 5%, and credit card and mortgage debt are at all-time highs. Consumer savings are thinning out. Pandemic-era savings have mostly dried up, and Americans are now leaning more on debt to sustain spending. So while confidence has rebounded, the underlying pressures haven't disappeared. Part 4. What it means for the economy in 2025. This confidence boost is good news, but it doesn't guarantee growth. If consumers start spending again, we could see a stronger Q3 GDP print, possibly above 2%. Retail sales improving after a sluggish start to the year. Positive momentum in housing and durable goods, but if this rebound fades by summer, spending may stall. Corporate earnings could disappoint, and the economy could inch closer to a technical recession. It all depends on how long the optimism holds. Part 5. Sectors to watch. If confidence continues rising, expect to see early signs in travel and hospitality. Summer bookings are already trending higher. Auto sales, especially if financing incentives return. Consumer discretionary, clothing, electronics, and furniture could get a bump. However, if tariff fears reignite or inflation ticks back up, grocery, gas, and household essentials could drive another wave of frustration. Retail sentiment could weaken heading into Q4. So if you're an investor, business owner, or policymaker, watch consumer data closely over the next 60 days. Final thoughts. Consumer confidence just bounced back after 5 straight months of decline. That's great news. For now. But the foundation is still fragile. Yes, People are feeling better about jobs and inflation. Yes, a tariff pause has helped ease fears. But the pressures of high rates, high debt, and global uncertainty haven't gone away. The key question isn't what happened in May. It's what happens next. If you found this breakdown helpful, subscribe to Finance-Related 101, where we turn economic headlines into clear, actionable insights. Thanks for watching, and stay confidence-aware.